Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks fall to their lowest in 2 months on concerns that Donald Trump's agenda could stoke price pressures. We will look ahead to US inflation data due later today. The president-elect picks Elon Musk and entrepreneur Vivek Ramaswamy to lead the charge to dismantle government bureaucracy. Plus, Germany's snap election campaign ramps up with Olaf Scholz making his case later today for another term as German Chancellor. To the earnings story right now, lines crossing from the insurer and the asset manager over in Germany. Allianz coming in with third quarter operating profit beating the estimates, just shy of 4 billion euros at 3.94 billion euros in terms of operating profit for the third quarter for Allianz, above the estimates of just shy of 3.8 billion. In terms of third quarter revenue, coming in at 42.8 billion euros. We know the focus, of course, is on PIMCO, the asset manager, so inflows into that part of the business will be scrutinised as well as the AUM for Allianz. We'll bring those details for you, of course, and continue to watch that story through the day with the opening trade, of course, and to see how that stock reacts at 8 a.m. UK time. ABN AMRO, the Dutch lender, the focus on net interest income and the search for a new CEO at the head of this bank. The stock is up about 22% year to date. And in terms of the third quarter operating income, coming in as a beat for ABN AMRO, 2.25 billion euros. The estimates had been for just shy of 2.2 billion euros. In terms of CET1 ratio in the third quarter, also coming in higher for ABN AMRO, 14.1%. The estimates had been for 13.9%. So on the top line, at least for ABN AMRO and Allianz, coming in with two beats there. We're going to be speaking, by the way, with the CFO of ABN AMRO, that Dutch lender, at 7 a.m. London time. Let's get to a broader check on these markets then, with investors taking pause and questioning to what extent the policy agenda of the incoming Trump administration will be inflationary, to what extent the tariffs and, of course, the deportation plans of millions of migrants in the US will cause a push up in prices. As we look ahead to CPI later today, with the top line CPI number expected to come in and edging up higher. That's the expectation, top line, year on year for the month of October. You're looking at 2.6% versus 2.4%. That's the estimates, of course. European futures currently pointing lower by 0.4% after a pretty significant drop in European stocks yesterday. The losses were pretty pronounced, again, in terms of repricing around the equity market and potentially the vulnerability of Europe to those potential tariffs from an incoming Trump administration. FTSE 100 futures currently pointing higher by 0.2%. S&P futures looking to notch a loss of 0.2% after some modest losses for the S&P and the Nasdaq 100 yesterday. Nasdaq 100 currently pointing down by 62 points. Let's flip the board and look cross-asset. More calls in terms of where the yields go on the 10-year. Again, linking to that Trump policy agenda, with the likes of Templeton joining the likes of JP Morgan, suggesting that 5% now is in the cards in terms of the yield on the 10-year. Currently at 4.43. We'll see to what extent that adjusts around the CPI print of today out of the US. Currently at 4.43 on the benchmark. Euro dollar at 106, a little softer again by about 0.1%. Bitcoin pairing some of the gains that we saw yesterday when it reached 89,000, currently at 86,868. And Brent, $72 a barrel, still the softness that you see in the oil markets overall, just up 0.3% so far in the session. Let's cross over to Singapore. Avril Hong standing by. And it's been another challenged session for the Asian markets. Avril.
Yeah, it is pretty ugly. I mean, you look at the region's benchmark, it's hovering near those 2-month lows. The bleed is pretty much across the board, save for the CSI 300. What's really interesting is today, the underperformance in markets are coming from those with economies that are either closely tied with the fates of China or that have run up huge trade surpluses with the US. Look at South Korea, Japan, Australia also down today. Hang Seng off to the fourth session of declines. Let's flip the board, and before I talk to you more about what we're seeing on the Hong Kong benchmark, take a look at this chart where it shows you the pressure that the renminbi is facing against the strong greenback. Of course, there is caution ahead of the US CPI, and this really played out in the yuan just a day ago, 3-month lows. Today, the PBOC is kind of voicing its displeasure, indicating its discomfort, because through the fix, it was 440 plus points stronger than what traders had estimated. escalated. And of course, traders had been banking on the Chinese authorities perhaps using a weaker yuan as part of a tool to fight Trump's tariffs. So given the fix, we actually saw a bit of firming up in the renminbi. Let's flip the board again, take a look at this next chart, which will show you the Hang Seng, as I mentioned, fourth session of declines, and it's actually broken through a key support level. It's just about to erase all the gains since late September. It looks so bad that we have MLive's Mark Cranfield saying that even if Tencent, the Chinese tech giant's earnings today come out and show that it's sustained or accelerating revenue growth, that's not going to help lift the mood very much. Of course, the recent weakness we've been seeing in the Hang Seng is related to the Chinese NPC disappointment, bad data on the mainland, as well as the Trump trade. Tom.
OK, Ava Hong, thank you very much indeed with a check on the Asian markets with our focus right now on Hong Kong. Staying with Asia, the yen, and this is a redhead crossing right now, the yen weakening to 155 versus the US dollar, so raising the risks of intervention by the Ministry of Finance or the Bank of Japan. Currently 155 on Japanese yen versus US dollar, down 0.3%. The currency, by the way, is down about 10% since September versus the US dollar. You were at 140 on September the 9th. You are now at 155. It will not be the BOJ. It'll be the Finance Ministry that intervenes, if it does intervene. So a weaker yen, once again in focus, that yield differential as markets place a 50-50 bet, essentially, on whether or not the Fed cuts in December. So that yield differential and expectations that rates will be higher for longer in the US with an incoming Trump administration pressuring the Japanese currency. We'll keep across that story for you. Talking of US politics, let's get the latest in terms of how that new team is shaping up under the incoming president-elect Donald Trump. He has named billionaire Elon Musk and entrepreneur Vivek Ramaswamy to lead a new Department of Government Efficiency, or DOGE, as Musk might want to call it. Let's bring in Bloomberg's opening trade anchor, Kriti Gupta, for the latest. Kriti, we are keeping you busy, or at least the Trump administration is keeping you busy with all these different names to that incoming team. Talk to us through the importance. Not a big surprise that Musk has this role. It's been flagged, of course. Yeah. But partnering with Vivek, what does it mean in terms of government efficiency? What does it mean about the cuts that may come through?
This is really the business piece that is coming through, the kind of business. I don't want to say lobby because that's kind of a little bit of a loaded word, but the idea that expertise from the business sector, that's what Elon Musk and Vivek Ramaswamy provide. And remember, Vivek Ramaswamy actually ran as a presidential contender and was an early disqualifier, basically, in the Republican primary, very quickly throwing his weight behind Trump and being very vocal in his support there in that endorsement. Elon Musk, of course, a similar story. Where they bring value contradicts perhaps some of the other picks that President-elect Trump has chosen. A lot of that have been anti-China rhetoric and anti-China stance and arguably protectionist stance. Elon Musk and Vivek Ramaswamy could balance that out on the other hand, simply because, as we know, Elon Musk has several business ventures in Asia across various sectors, in Ukraine as well. This is going to be a big deal. Vivek Ramaswamy has also significant business exposure as well. So the combination, again, kind of balances out the other side of the picks of, say, Marco Rubio, for example, or the other chosen candidates.
Yeah, arguably Musk has the closest ties to Chinese leaders amongst US executives. Yeah. So to your point, that's going to be a really fascinating potential source of tension running through this Trump administration. Talk to us about some other big names. We got an ambassador to Israel. We've got an envoy to the Middle East. We've got a new Secretary of State for the Pentagon for Defense. What are the names that we're seeing in terms of the team as it's being built out with some of the key appointments?
Well, let's start with the ambassador to Israel. I think this one's a really important one here. Mike Huckabee, who is also, by the way, a presidential contender, is the former governor of a state called Arkansas in basically the south of the United States. Not very many people are familiar on an international stage, but he's someone whose daughter, by the way, served as the press secretary for Donald Trump as well, and has been very vocal in terms of a pro-Israeli stance. Here's why that is a little bit of a concern from the current Biden administration. Those ceasefire talks, the terms around it could completely change. And it's important as well to keep in mind that in just the last 7 days, actually this past weekend, Qatari officials evicted Hamas, the Hamas political station in Qatar, in Doha, away from the country. The idea here simply being, in terms of the ceasefire negotiations, the Qatar no longer wants to be an intermediary. The fact that Mike Huckabee is the envoy, after being very vocal as a pro-Israeli kind of almost anti-Hamas stance. That makes a ceasefire, or the prospects of a ceasefire deal, at least on the surface, a little bit harder from the early kind of comments that he has made in the past 2 months or so.
Let's just meditate on that for a moment. A Fox News host to the Defense Secretary for the US. OK, Kriti Gupta, thank you very much indeed in terms of some of these key appointments for the incoming Trump administration. Opening trade anchor, of course, Kriti Gupta, following all of this for us. Now, former Treasury Secretary Larry Summers has warned that Trump's campaign promises, including tax cuts and tariffs, will trigger more inflation. Let's get more views then and analysis in terms of how the markets are adjusting to this view with Bloomberg's Valerie Teitel. Valerie, what is the latest then in terms of the view across these markets about the inflation impact of Trump's policies? It seems in the last few days, markets suddenly woken up and said, hang on, this could actually be happening. Higher prices.
Look, Tom, the debate is still very much out there on whether Trump's domestic policies will be inflationary or not. We actually heard from the frontrunner for the Treasury Secretary position saying he thinks that any notion that Trump's policies is inflationary is, quote unquote, absurd. So still a lot of debate out there on whether these Trump policies could ignite inflation and maybe complicate the Fed's fight ahead of this U.S. CPI data we have later today.
What do we expect from that CPI print? Is it expected? Could it move the dial in terms of the Fed? Markets now trade as 50-50 split as to whether or not you get another cut in December.
Look, Tom, it very much could. This U.S. CPI print today is expected on the street to come in a little bit hot. We are expected a repeat of that 0.3 month on month for the core reading. This core inflation, it has been sticky. It has resurged on month, both year on year, tempting us to price out more expected cuts from the Federal Reserve. We flip on. We can just take a look at how the Fed pricing has changed recently, Tom. We're now expecting over the next 2 meetings less than 25 basis points of easing from the Federal Reserves, which means we could have a Fed on pause before Inauguration Day in January, and that could attract more heat from the president-elect.
And we're seeing the ripple effects of this, aren't we? In the Japanese yen, crossing to that 155 level, the softness again in the Japanese currency, down 0.3% in the session. What do you make of the moves that we're seeing in the yen?
Look, it can all be related, Tom. The less cuts we have from the Fed going forward, the more elevated front-end yields are in the U.S., the stronger the dollar is, the more it can extend this dollar strength run, and the more weak the yen can go versus it.
OK, Valerie Teitel, thank you very much indeed with a check on these markets and how they are readjusting to the prospects potentially of an inflationary policy agenda from the incoming Trump administration and the ripple effects you're seeing across assets, including, of course, today. And you're seeing that notably with the Japanese yen. Here's what else to think about in the day ahead then. 8:30 a.m. UK time. We're going to get the minutes from the Riksbank. So we've got a touch there in terms of how Sweden's central bank is thinking about the inflation trajectory there and the path for rates. 10:30 a.m. UK time. We get a German 10-year bond sale. We'll see to what extent the market is able to absorb that, again, at a time of a political uncertainty in that country. And at 1:30 p.m. UK time, yes, it is the big one on the data front for us today, at least. The October CPI print out of the US. Estimates, top line, year on year, you're going to get a nudge up to 2.6% versus 2.4% in the previous month. Again, will that change the calculus of this Federal Reserve? You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go. Coming up, Siemens Energy boosts its midterm targets as infrastructure demand grows. We're going to discuss their earnings and the outlook with the company's CFO, Maria Ferraro. The stock is up more than 220% year to date. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Wednesday, everyone. Now to the earnings story. Siemens Energy has raised its midterm targets after demand for its grid technologies helped offset losses at its challenged wind turbine division. The German company's share price has more than tripled this year. As it turns the page on long-standing problems at its Gamesa unit, where faulty turbines led to massive losses that overshadowed profits elsewhere. where the context, of course, is that the stock was challenged in recent years. But yes, it's had a rip of a run so far year to date. I'm joined now by the Siemens Energy CFO, Maria Ferraro. Maria, thank you for joining us. I want to start with they've got the CFO hat on, so I want to start with the margin story. You're seeing a profit margin of 10 to 12% by fiscal 2028. That's versus 8%. So we'll go straight to the margin story. How confident are you that you reach that target of 10 to 12%, or is that a conservative target, given the turnaround that you're seeing at the business?
First of all, thank you for having me. Of course, I'm very pleased with fiscal year 24. As you rightly mentioned, it was a very important year for us, and I think it showed across all of our businesses that we had strong demand. We have a backlog now of 123 billion. To your question on our midterm targets, this helps fuel the future. We're very confident not only with how much we have in our backlog and what we're serving with our customers, but also the margin quality. So to your point, how are we going to get there? It's really step by step. And we're very pleased in terms of our targets for this year. We've either met or exceeded in all areas. And this really makes the basis, or fuels the basis, if you will, for the future.
OK, is that 10 to 12% target, is that conservative in your view?
Look, it's a target that we stand behind. And of course, we see that looking back again to this year, Grid Technologies, our business continues to really outperform in terms of demand. Electricity demand continues to rise year over year. And of course, that underpins that midterm target. And again, we're really happy with how things went this year. It's a lot of hard work where all of the businesses showed turnaround. Siemens Gamesa has stabilized over this year. And again, we have a profit of 345 million, or 1% this year. And this is really the basis for the years to come.
Which parts of the business do you see the strongest growth next year?
Yeah, as you can see in our outlook for next year, we see an 8 to 10% growth and 3 to 5% profit. And of course, that's really on the back of the growth that we see in gas services. We see high digit growth there. In terms of Grid Technologies, we see double-digit growth continuing. And again, it's really this really positive market momentum across the businesses. So you see that in our outlook for next year, that we see the market momentum this year, which allowed us to meet or exceed all of our targets, and that continues into next year.
Are you able to put a number on the demand for electricity linked to that AI play in the years ahead? How significant do you expect that to be?
Yes, the electricity demand, roughly speaking, depending upon where you look, we're looking to double by 2050. And again, that's on the basis of growing population. Of course, it's data centers, it's AI. What it shows, and you can debate whether it's 50%, it's going to grow. And again, that really is beneficial for us. That's the market momentum that we saw this year that showed significant growth across our portfolio. Because, of course, when it comes to grids, for example, in certain parts of the world, they have to double their capacity to meet that demand. And here at Siemens Energy, whether it's our Grid Technologies business or our gas services business, which continues to also grow in light of the demand for base load and secure supply. Together, all of that we see, of course, well positioned to meet that electricity demand. But of course, we see demand growing exponentially.
Exponentially. Maria, does a Trump presidency change your plans for that key US market?
It's exactly what you said. U.S. is a key market. It has been and will continue to be for us. We're in the U.S. Very proudly. We produce in the U.S. for the U.S. We have over 13,000 people, and we're growing in the U.S. We have over 11 production facilities. Again, actually manufacturing in the U.S. for our U.S. customers. We're committed and actually have committed to an investment of over 150 million to produce power transformers in Charlotte for the U.S. demand. So again, we're perfectly positioned in the U.S. for the U.S. market. And of course, with our broad portfolio, no matter what the new administration comes in with, of course, there will be maybe puts and takes, but we have a broad portfolio to address all parts of the energy transition. So we're very confident with our plan.
Maria Ferraro, CFO of Siemens Energy. Thank you very much indeed. The stock up about 230% year to date. Coming up, Citibank CEO Jane Fraser tells us why she thinks the Trump administration will be pro-growth. More from our exclusive interview next. This is Bloomberg. Welcome back. Citigroup CEO Jane Fraser says clients are focused on moving forward with mergers and acquisitions driven by the need for scale to compete. Fraser also told Bloomberg she expects a pro-growth agenda from the incoming Trump administration.
I view this not just from the perspective of our own operations, but from that broader perspective from our clients around the world. And I think they'd say 4 T's. The first one is the tempering of regulation. Second would be taxes. Third would be tariffs. And the final one would be tightening immigration. And as we look across the board, I would put that in the perspective of a largely pro-growth agenda.
Well, you're also the most global bank in the country. How are you preparing for the world of global finance to potentially be shaken up by some of these policies, the tariff policy in particular? It's something that Trump has made clear it's a key policy that he'll be implementing.
So when we look at trade, you're right that there's going to be changes, but trade is not going away. So as we look at this around the world, I think we've already seen major changes in the global lanes in the last 3 years, driven by geopolitics and technology transformation. If you speak food, energy, technology, security, cyber, finance, green, all of these different lanes are changing around the world. This just puts one more into the mix. So it will take a bit of time from trade and the tariffs to see what goes from the rhetoric to the actual agreements and the policies, and then into execution. We'll have some time to work out what that mix is.
Another major reason I bring up trade first is because a lot of prominent economists have brought up the idea of inflation that could be brought on the heels of tariffs. How concerned are you about inflation? You were kind of very early here to catch it in the first place.
Certainly there are elements of this that could be inflationary. At the same time, we've also seen, particularly here in the States, an ability to have productivity improvements and driving changes through. So I would say we've got to wait and see. People decide policy and determine policy. Let's see what the policies are, and then we can work out what's the response to it.
OK, that, of course, was Citigroup CEO Jane Fraser speaking to us exclusively. Your markets right now risk off across the equity space. European futures pointing lower by 0.6%. S&P E-minis, US futures also off by 0.3 after some modest losses across US stocks yesterday. Coming up, we're live at the UBS European Conference here in London to discuss Europe's economic outlook and what another Trump presidency means for the continent. Stay with us. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories. Let's set your agenda. Asian stocks fall to their lowest in 2 months on concerns that Donald Trump's agenda could stoke price pressures. We are going to be looking ahead to US inflation data due later today. The president-elect picks Elon Musk and entrepreneur Vivek Ramaswamy to lead the charge to, quote, dismantle government bureaucracy. Plus, Germany's snap election campaign ramps up with Olaf Scholz making his case later today for another term as Chancellor. Checking in on these markets right now. Risk off across the equity space. Stronger dollar, high yields, once again part of the story as investors again reprice around expectations of an inflationary Trump policy agenda. Some of the names as well being picked to lead that new administration, causing some concern around the hawkishness on China and what that could mean for global trade. European stocks pointing lower by 0.7% after European stocks fell 2% yesterday. A very challenging day for the European stock equity space yesterday, and looking to build on the losses today. FTSE 100 futures flat, S&P futures looking to losses of 0.3% after dropping around 0.3 yesterday. Nasdaq 100 futures looking lower by 85 points. You had some softness as well across the Nasdaq 100 yesterday. Some modest selling pressure ending in negative territory. Yields up again in the session today after yields rose about 10 basis points across the Treasury curve yesterday, up 1 basis point on the benchmark 10-year, which is yielding you 4.43. It's 5%, the next level for the benchmark. That is the call from Templeton, JP Morgan and T. Rowe Price right now. Euro dollar at 106. Bitcoin, some profit taking across the crypto space. 86,000 currently on the biggest cap cryptocurrency. $72 a barrel on Brent, up 0.3%, but broadly the picture for oil has been weak, and OPEC cutting their forecasts on softer demand out of China. Let's go to the politics of Germany right now. Olaf Scholz set to make a public address today, setting out his case for another term as German Chancellor. Let's bring in Bloomberg's Oliver Crook in Berlin then. Ollie, what are we expecting to hear from Scholz later today?
Yeah, Tom, really a sort of day of reckoning for the German Chancellor, who just coming after a week after he dissolved basically his government by firing the finance minister, Christian Lindner, now goes before Parliament to do a 30-minute speech where he's going to lay out sort of his plans and what sort of why he thinks, first of all, to address the political crisis, but also sort of to have a platform to talk about what he would like to do. The problem is going to be that is then going to be followed by a 2-hour debate, which is going to be intensely fiery, which really speaks to some of the political and economic issues here in Germany. What he will focus on is likely sort of make some of the same refrains that he has made over the last sort of few months in his disagreements with the finance minister, saying that basically Germany is now hamstrung by these sort of very stringent borrowing limits. This is something he wants to do away with, the debt brake, saying that he wants to bring the economy back to life with more economic support. But the real contrast between what he is saying and what the CDU is saying is he wants to do it in a much more equitable fashion. That means that he does not want to cut back pensions, does not want to cut back benefits. But for many Germans, there is a sort of sense of weariness with this three-party coalition that has failed to be able to sort of resolve its differences for the last year and a half, particularly with Donald Trump sort of standing there on the horizon, where Olaf Scholz has made sort of no secret of his favoring of Joe Biden, and the fact that it took them almost a week to speak on the phone after he was elected, that does not bode particularly well.
And that may be part of the strategy, potentially, of his opposition partner, Friedrich Merz, then, of the CDU. You can't really call them partners, I guess. Opposition party leader. How is Merz looking to position himself leading into this vote, Ollie?
Yeah, so really thinking about Friedrich Merz, who is by far the sort of favored candidate here, and we should say that, you know, sort of Germany is a very sort of tends to lean very closely towards the CDU. There was that sort of short gap in the polling when the actual last election was held, when the SPD managed to win, but really the CDU has been number one in the polls really for the last 5 years, generally speaking. Where he will be sort of distinct from Angela Merkel is this is a much more conservative figure than Angela Merkel was on a number of different issues, and he spoke yesterday, and I'll just give you some of the summary of some of the issues that he's going to prioritize. Number one, he says, is major tax reform. That is step number one. He wants to be a low-tax chancellor, particularly for corporates. A lot of companies are going to like that sort of thing. He wants to cut benefits, unemployment benefits. Pensions are another thing that are going to be a focus. This is really where Scholz wants to be distinct from Merz. He also wants to cut out bureaucracy and regulation. I wonder, Tom, have we heard that before from the German government? Yes, everyone says they want to cut bureaucracy, and yet there is still a ton of bureaucracy. This is something that he says he really wants to take on, and he's been much more restrictive on migration. This is a sort of great difference between him and Angela Merkel, and here he hopes to cannibalize some of the vote from the AfD, from the extreme right and the extreme left, who have really been very concerned with the issue of migration. He's much harder on those sorts of issues, but he also wants to boost defense spending, more support for Ukraine. He says that there should not be all these limits that we're imposing on Ukraine in terms of these sort of missiles striking within Russia. He wants to start, for example, deliveries of those Taurus missiles to the Ukrainians. Plus, he wants to boost defense spending from $50 billion to $80 billion. Of course, Tom, as ever, the question is, how are you going to pay for it? And that'll bring us sort of the main issue here, which will be the debt brake, and that will be the sort of really interesting political debate in Germany going forward.
Yeah, some pretty fascinating policy divergence there from the two leading candidates. Oliver Crook in Berlin with the setup ahead of that speech from Olaf Scholz and what to expect from the CDU leader as well. Ollie, great stuff. Thank you. Now, the significance of Trump's election win for Europe is, of course, a big topic of discussion. That's an understatement. EU officials are preparing for more protectionism and a possible tariff war on top of existing trade tensions with China, something, of course, that's filtering through domestic politics in Germany, as Ollie was saying. The continent's relationship with the incoming Trump administration, then, is among the talking points, of course, not surprisingly, at the UBS European Conference being hosted here in London. Bloomberg's Francine Lacroix is on the ground for us with a guest. Francine.
Tom, thank you so much. I'm delighted to be here with Arend, Kapteyn, Chief Economist of UBS Investment Bank. It's a good conference that, of course, brings a lot of the big thinkers in Europe. A little bit later on, we'll also be speaking to Jens Stoltenberg, the former NATO, of course, chief. And this is all about what Donald Trump does next, Arend. First of all, thank you so much for joining us. But actually, if you look at the world economy, it was okay. U.S. was doing great, one of the best economies in the world right now. And then so many questions on what happens to inflation and what happens to Europe because of Trump policies.
Yes, and so the number one thing people want to talk about is tariffs, right? So, and I think even the ECB officials, so I think tariffs are viewed as this uncertainty shock that is really the last thing they need right now. If you think about, are they going to be able to get to their forecast? I think they're already wavering, I think, on their own outlook, right? I think they're at the point of almost throwing in the towel on the forecast and downgrading things, which would then sort of give you the next leg down on monetary policy pricing. But the tariffs are potentially one of these things that sort of, for them, impede the ability to recover. And not that the tariffs would necessarily happen immediately, but the threat of them happening could sort of create this uncertainty environment in the first half of next year.
Arend, a couple of questions. First of all, I mean, we talk, base case could be 10 to 20% of tariffs. They could be much higher. And what kind of time frame could we be looking at?
Yeah, so we actually, in our, we did a scenario note before the election, sort of talking about those tariffs. We thought the China tariffs definitely going to happen. It's already in our baseline now. The rest of the world tariffs are not in our baseline, and in part because we thought the global tariffs has, legally, it's actually very difficult to sort of put that together. I also don't think the U.S. has a global, bilateral trade problem. It has a specific problem with China and Europe and a few other countries. So more likely, I think, is that you get something European specific rather than a global tariff. Although clearly, listening to the campaign, that debate's not dead, right? So I think they are actively still debating and considering it. The critical thing for us is, so we don't know whether it's 10 or 20, but timing-wise, I don't think it's very likely we see this in the first half of next year, right? So whereas for China, you have legal authority, there's actually a retaliation clause in the Phase 1 agreement that allows you to almost immediately start discussing these increases. You're sort of starting a little bit from scratch with the authority for a global tariff, and they're going to have their hands full on China. So for me, this is much more of a 2026 event than a 2025 event.
I mean, in this case, what does Europe do? And again, if you have immediate, 10 to 15% tariffs, is it automatically inflationary, or is it initially deflationary and then it hurts growth?
Well, so tariffs are inflationary if you raise tariffs, right? So, and I think that's the critical thing when you sort of model this is, we sort of asked the team, what is your retaliation assumption? And if there's no retaliation, it's actually not that inflationary. The worst thing that then happens is your currency depreciates a little bit, right? And then the question is, does that weigh up against the growth impact? So yes, so tariffs are inflationary if you raise tariffs. Now for Europe, then the question is, what do they do? We're frankly, we don't know, right? My team has sort of come back with the assumption that we will only get partial retaliation. That's very much sort of along the lines of, well, maybe if we don't, it's for everyone. It's not just, tariffs against us. And so politically, we maybe don't need to react as strongly. We're also not in a great economic shape. So why don't we just maybe partially respond? My view in that debate is I just can't think of a single instance the last 15 years where the Commission did not fully retaliate against any kind of U.S. Trade threat.
But what does that mean, again, for the economy, and what does it mean for investment?
So the way we sort of think about it is that if you raise prices, then in first instance, demand goes down sort of proportionally. So we call that unit elasticity. So, and then it just depends on how much do the tariffs go up, how widespread they are, and how much does your currency move. So it'll depend on the size of the tariff. We didn't sort of publish the European specific numbers, but at a global level, the 10% tariff, if you do that, let's not even talk about 20. The 10% tariff is more damaging than the China tariff, right? So, and if you take the two combined, you're talking about something that's 5 times larger than what happened in 18-19. That is super disruptive for the global economy, right? So at least a percentage point off the global growth. inflationary in the US, very inflationary, talking about adding 150 basis points to inflation in the US. For Europe, it really is going to depend on what then happens on the currency and how they retaliate.
Arend, I guess $1 million question is, what would the tariffs be for? Because is it a tit for tat just to show that, who's boss, or actually don't mess me about, or is it actually to hurt the other side?
I think the way the China tariffs are framed compared to the European tariffs are quite different, right? Yeah. So when you sort of listen to people who are sort of in, let's call it Trump's orbit, like China seems like this generational struggle where the notion of having a quick deal and everything will be fine, I just don't buy it, right? I think this is, they view them not as an ally, but as sort of a strategic opponent that they need to constantly keep fighting. Europe, they talk about very differently. Europe is our friend. We need them to sort of help us stand up to China. But they also do have a fundamental problem with a few countries which have for decades been running surpluses.
Germany?
Right? Germany, and they also talk about Ireland, I think because of all the tax evasion. So I think where they really have an issue is with a narrow set of European countries, not actually with the whole world. But of course, because Europe is united within the EU, you have to sort of go after the EU.
But you also see the personalities of different world leaders and how they interact with Donald Trump. I think Emmanuel Macron managed to get certain caveats to the tariffs that he was putting on Europe. How difficult is it for Germany to go through this in the midst of political turmoil?
So I think the interesting thing about Europe, of course, is that trade sits with the Commission, not so much with the member states. It's actually one of the frustrations that the trade representatives who were in the last Trump administration had, is like, with Europe, you never know who to strike a deal with because, it's the Commission. So, they're really still frustrated about it. Like, even years later, they still talk about, well, we couldn't strike a deal with anybody. So in that sense, I think it is a little different. Now, of course, the political leadership matters, and the personalities will matter. And I think, I think it's too soon to tell. Obviously, with Germany, we don't quite know who's going to be in charge necessarily. So let's wait and see.
Arend, overall, do you see a lot of the forecast actually for the world economy, for the European economy to go down? And what happens to the U.S.? So global growth right now looks weak as it is, right? Where as of Q3 at the global median, you're sort of running at half of historical sort of growth levels. And now, of course, you could say, well, surely that's going to get better because we got all the central bank easing and the inflation shock is going away. But now you have this uncertainty and the tariff threat and sort of the consumer outside the U.S. still not spending. And so normally when I do an outlook, we have sort of our forecast, which then drive the markets, and then we have a story. And I think it's going to be the opposite this time. I think actually it's going to be uncertainty, and whatever happens with the U.S. administration is actually going to drive the markets, which is then going to drive my forecast. Like, I really do not feel I'm in the driver's seat. And so I think the theme for next year is just incredible uncertainty and volatility. That may shake out positively, right? We don't know. But the type of stuff that's being discussed doesn't instill me with great confidence that growth is going to pick up. Arend, thank you so much for joining us today. Arend Kapteyn there, the chief economist at UBS Investment Bank. With that, I'm going to send it back to you in the studio, Tom, and we'll have plenty more throughout the day here at the UBS conference.
Fantastic stuff. Francine Lacroix, thank you very much indeed. On the ground for us at the UBS Investment Bank chief economist. And Francine will have much more, as she mentioned, from that event, including an exclusive interview with the former NATO Secretary General Jens Stoltenberg. You can imagine that will be very interesting in terms of what the new Trump administration will be doing vis-a-vis Ukraine, for example. Coming up, SoftBank's Supercomputer. Nvidia says the Japanese tech company will get their latest chips for their AI venture, as SoftBank just jumped to the top of the queue for those AI accelerators. Details are next. This is Bloomberg. Welcome back. SoftBank will get the first of Nvidia's latest Grace Blackwell chips to build Japan's most powerful AI supercomputer. Nvidia's CEO, Jensen Huang, announced the partnership at the chipmakers' AI Summit in Tokyo.
I have a very big announcement to make. Today, we're announcing that we're partnering with SoftBank to bring and to build an AI infrastructure for Japan.
Okay, let's get more from Bloomberg's Min-Jong Lee on the details around this. Ming, how did the partnership between these two come about?
Right. So they do go a long way back when Masa was interested in Nvidia, thought the company was undervalued, invested in Nvidia, although Masa divested that stake a little bit too early. So the two have always maintained a friendly business relationship, more or less. And the partnership with SoftBank is a part of Nvidia's broader efforts to kind of further strengthen its dominance in the AI chip market, striking deals with a number of companies in the region, not just SoftBank.
What else is Jensen Huang planning for Japan then? What else did he talk to about the plans for Nvidia and building out their footprint in that country? Sure. Jensen mentioned how Japan is a very important market for Nvidia, and he has strong ambitions, big ambitions for the country. And they also announced a number of partnerships with a number of companies across various industries, including cloud. So companies like Sakura Internet, GMO, KDDI, and also Toyota, the automaker, healthcare, Fujifilm for healthcare, and even Olympus. So really, Nvidia is going out of its way to strike a lot of deals with a number of companies to basically increase its dominance in the country throughout. I mean, look, SoftBank is a company you know very, very well indeed. So what is in it for Masayoshi Son and SoftBank? Right. With this deal, as you described earlier, SoftBank is building what it says will be Japan's most powerful AI supercomputer using Nvidia's DGX B200 product. So this move is in line with Masa's ambitions to take part in whatever way he can really to make artificial general intelligence or artificial superintelligence become a reality. And Masa and his executives have repeatedly said they have ambitions for data centers, robotics, and also energy and power generation. This is all part of Masa's ambitions to make AI a real tool for everyone every day. So this partnership with NVIDIA is a part of his big ambitions, but definitely more to come here going forward. OK, great context in terms of what we're seeing. The partnership between Nvidia and SoftBank potentially very consequential indeed. Bloomberg's Min-Jong Lee in Tokyo with the details. Thank you. Meanwhile, Apple is nearing the launch of a new product category as it aims to catch up with rivals in the smart home market. It's planning to announce a wall-mounted display that can control appliances, handle video conferencing and use AI to navigate apps. Bloomberg understands the device will spotlight the new Apple Intelligence AI platform. And Klarna has taken its first step towards a US IPO. The Swedish payment platform has confidentially submitted a draft registration statement to the Securities and Exchange Commission, the SEC. The number of shares to be offered and the price range have not yet been determined. Klarna has refocused itself ahead of the planned IPO, shedding businesses and investing in artificial intelligence. And Greek Prime Minister Kyriakos Mitsotakis says he thinks a trade war on tariffs would be bad for Europe and the US. He remains confident there are ways to find win-win solutions for the transatlantic partnership. Mitsotakis also spoke about why short-term climate solutions are just as important as long-term goals, which are being missed left, right and centre, by the way, in an interview with Bloomberg's Jemana Pasechi at COP29.
As much as we focus on long-term mitigation, and Greece is certainly doing its part, we need to place more emphasis on short-term adaptation and helping our people cope with climate disasters, which we know will happen with increased frequency. So when we think about funding, this is not just about helping the poorer countries with their energy transition. It is also helping more mature economies dealing with the impact of climate change today.
Greek Prime Minister Kyriakos Mitsotakis speaking to Jemana Pasechi at the COP summit in Azerbaijan. There's plenty more coming up. I'm going to give you a preview of that US inflation data. Is it going to move the markets? We have a nowcast update from Bloomberg Economics. They think it may come in hot. That's coming up. This is Bloomberg.
they're not going to act until they actually see the Trump agenda actually take form. So don't expect any near-term response from the Fed. But in the longer term, I think if Trump does what he said he's going to do, it's going to be a difficult economic ride.
Okay, Bloomberg opinion columnist and former New York Fed President Bill Dudley there on what may lie ahead for the Fed with Donald Trump in the White House. It could be, quote, a difficult ride. It's already proving a difficult ride for other currencies and markets out there. Think of the strength of the dollar at a 2-year high. It's gained around 5% year to date. The Bloomberg Dollar Index year to date up is about 5%, up more than 4% versus the euro. You see the pressure on the yen today. The last time I checked, it crossed that 155 level. Intervention back in the cards, potentially for officials over in Japan. And of course, this is on the back of higher yields. You saw that move yesterday once again across the Treasury curve. Yields up about 10 basis points. And the calls for 5% on the 10-year coming through from the likes of T. Rowe Price, Templeton and JP Morgan, all calling out expectations that maybe you get to 5% on the 10-year yield in the short term. Let's flip the board and have a look at what to expect then in terms of the inflation data out later today. Top line, headline, year on year, the forecast is 2.6%. compared to the previous month of September of 2.4%, so it's expected to tick up. The nowcast from Bloomberg Economics, though, month on month, sees the inflation print coming in hotter than the estimates. The estimates month on month, 0.2%. The nowcast Bloomberg Economics take is that you could see 0.3%. Does that adjust the views around the Fed's next steps and rebuild expectations around this Trump trade? Higher yields, higher inflation. Markets currently split 50-50 on whether they go again in December. That inflation print dropping 1:30 p.m. UK time. More exclusive interviews coming up from the annual UBS conference in London, including former NATO Secretary General Jens Stoltenberg. Coming up, though, on the opening trade, the CFO of ABN AMRO on the Dutch lender's latest earnings. The opening trade is up next. This is Bloomberg.